Hello, everybody. I wanted to go over some thoughts I had on the current state of the stock market as a whole. So, we've been seeing a lot of volatility. This is due to many things. Not only is it due to such things as tariffs um, and current administration policies, but these are things that it's like a culmination of events have been leading to this time. So, in every economic market, there's rises and falls. It's very normal. Keynesian economics ideal is that you can bypass the falls through economic policies such as quantitative easing or tightening, which is what the Federal Reserve attempts to do in order to control inflation and control growth and keep things reasonable. Today, the United States is facing issues outside of this control. It's facing a demographic issue with large numbers of people retiring and not enough people to support them. It's facing a changing workplace where more things are being automated. We already went through a outsourcing binge. It looks like we're headed into an automation one. So within the stock market, these things become priced in. Every day I see on CNBC, you know, one day stocks are up 30 points, or the NASDAQ is up 30 points, and it says, the article headline says, NASDAQ rises as trade fears shorten, or trade fears go away. No one's afraid of the trade war anymore. But then the next day it drops and says, NASDAQ drops on trade fears, or afraid that people will not get the deal they need. So a wise investor is investing in things in which an individual such as the president, the words they say isn't going to change it that much. So in the past couple months, a lot of companies have been released on the market. You got Uber, Lyft, Beyond Meat. Companies, I believe Pinterest recently came out, or maybe coming out soon. These are companies they're tech companies. They're widely hailed, widely used, but they're companies that have never turned profits, and yet they're valued at billions of dollars, which in my mind doesn't make sense. When I look for investments and I look for sound companies, I'm not going to look at a company that has never turned a profit and is already valued at that much as a time to invest. If it was a new company, Pinterest or Uber or Lyft, brand new companies, and they had these ideas and the stock was very low, it might make sense to buy in. But at the current state of valuation, the prices are very high and it's going to take a long time to get back to those initial valuations in most cases. Companies that are built on expanding debt and credit are not worth investing in. Companies that rely on cheap rates, not worth investing in. What's been going on here in the United States is not normal. And it's not normal economic policy. And it's not market driven. So, in the event of a crash of the stock market, companies that rely on expanding debt, such as Tesla, who have some assets, but their debt to asset ratio is way out of whack and they have never turned profits, will dry up. in the absence of cheap and easy credit. We've talked in other videos about how the credit market currently is in a bubble, and a lot of these tech stocks are in a bubble, or they are a bubble, just like the dot-com bubble, which crashed in 2000, and the housing market bubble. Everyone is looking for a quick buck. Whenever you see or hear things promising infinite growth, whenever you hear people saying, oh, this is going to be the next Amazon, or this is going to be the next Apple, it's probably too late at that point. You need to do your own research, find companies you like, products you like, and invest in those companies. Go to stores of companies that you want to invest in and see what it's like on the ground floor, and then look at their financials. Nothing that comes quick is good. Nothing that's easy is good for you. When you're investing and looking at opportunities, you need to be looking at long-term possibilities, look at history, and look at things that have survived throughout history, and decide on your investments that way. Amazon is a large company today. I wish I had invested in it when I was a very young man, when it had started out. But that day has come and has gone, and Amazon is massive now. And it will continue to grow for a little while. But what I suggest doing, if you're thinking about investing in Amazon, is look at the history of Sears Roebuck Co. and look at Sears today. Amazon, it's crazy how much Amazon mirrors Sears Roebuck. You can get the old Sears Roebuck catalog that they used to mail out to people. It was like the internet shopping center of the late 1800s, early 1900s. You got it mailed to your house, and you could get anything mailed to your house. Anything. You could get a house mailed to you. You could get a gun mailed to you. Washing machine, dolls, clothes, anything was in Sears Roebuck. Now everything is in Amazon. There's nothing new under the sun. We've been there. It's been done. So I have a lot of friends who are interested in cryptocurrencies and things like it. And they talk about how it's, oh, it's good to use as a money. You can use it to buy things. But no one's ever buying anything with it because they're holding it because they want to see if it goes up. All right. So the money argument isn't really there. It's not stable enough to be money. So people are buying it. They expect a moonshot. They think they're going to become millionaires. But again, the time for that has come. It happened to a lot of people. It could go up again, but it's not in my investment strategy. Even if it jumps up, I'm not really going to regret it. Cryptocurrency is like hot potato in my mind, or a credit swap. It's not something I'm interested in. It's not on my time horizon because I have a very low risk tolerance. Now that I'm a little bit older and I have children and a wife, when I was a young man, my risk tolerance was massive. It was terrible. And it changes a lot. So in the event that the market is going to tank, say it drops 50%, which has happened in recent history, keep this in mind. More millionaires were made during the Great Depression and in the 2008 crisis than any other time. The smart money has already left a lot of assets and is waiting for a drop to get in. Regardless of the drop, even if you hold assets, sound companies that have solid profits and historical patterns of sustainable growth will still be okay, even in the event of a market crash. It's the ones that are relying on this dream of massive, infinite growth, super fast. And when you look at a company like Uber, you'll notice that a lot of the people who began with the company are now gone. As it has spun off, they've sold their portions and left rich. So the initial vision is gone. Look at Apple. Steve Jobs was a genius in his own right. He knew how to get people to work on his vision for him. And he was visionary. And he led the company and then was booted out. And then the company was failing. They brought him back on. Boom. He got the iPod. Then he got the iPhone. He was not only a managerial and leadership genius, he was a marketing genius. He's good. I've seen some of his videos from the first iPhone launch, and oh, the way he sells it is good and hilarious at the same time. So, but he was the vision. So when the people who are the vision of the company begin to leave, you got to watch out. And any company that relies on a charismatic leader, such as Tesla, I wouldn't touch either. But that's just me. If I had bought Tesla a long time ago, when I first thought about it, I would have made a lot of money off of it. Thousands of dollars. But if I had bought it a year or two ago, when I had thought about it, I would have lost money. And I probably would keep losing money because that man seems to have lost his head a little bit, unfortunately. I hope it's okay. So I guess the point is, build your foundation on the rock, the time-tested material, the solid ground. There are lots of investments out there. That's where you build your foundation for the rest of your house. You don't build on the sand. Now, it's fun to go to the beach sometimes, and you can put up a shelter or camp out on the beach, have a good time, make some quick money, I guess. But you don't build your main foundation there, your main home. It's not solid. It's not good. Look for solid investments. So let me know your thoughts below, what you think about investing, cryptocurrency, whatever. Have a good day. Thanks for watching.